All right, welcome back, B2B pros. Okay, let's just jump right into this explainer, breaking down the absolute latest critical polymer market data for the fourth week of August 2026. Now, if you are out there managing supply chains or procurement budgets, well, you already know exactly how volatile the nylon market can be right now. So today, we're going to unpack the specific pricing shifts and market sentiments you absolutely need to know for PA6 and PA66, and we are doing it entirely through the data. But before we embark on our global tour, let's quickly establish our baseline. We've got to recognize our intelligent source for today's explainer, which is the comprehensive weekly report from Polymer Bazaar. They specialize in price, prediction, and profit insights, which really gives us the raw data we need to actually make sense of what is, frankly, a very complex global manufacturing landscape. So here's what's on the agenda today. Number 1, feedstock and baseline costs. 2, Western markets, looking at the USA and Europe. 3, Eastern markets, covering China and India. Number 4, market pulse and purchasing strategy. And we'll wrap up with number 5, instant bazaar access tools. Okay, starting off with section 1, feedstock and baseline costs, the Chinese baseline. To really understand global polymer pricing, we always have to look at the macro baseline costs coming out of China first. They effectively set the stage for literally everything else downstream. Looking here, caprolactam is sitting at 13,070, and adipic acid is at 8,500 RMB per metric ton. And this immediately builds some early tension in our market narrative. I mean, these aren't just arbitrary numbers, right? They represent the foundational production costs that are actively pushing upward right now, creating this massive ripple effect across the entire global supply chain. Keep these baseline costs in the back of your mind as we see how the different regions are reacting. Moving right along to section 2, Western markets, USA and Europe, diverging realities. Let's look at the US market, where there's some really heavy contrast right now. For PA6, prices are just completely stable at 144 cents per pound. And why is that? Well, it's because the offtake, the demand from those key end user sectors has actively waned. But then, conversely, PA66 prices actively climb by 3 cents to hit 178 cents per pound. This specific price hike is being driven by two totally distinct factors colliding. You've got those higher global feedstock costs we just talked about, combined with what became an unexpectedly tight local supply of cyclohexane. So it's really a tale of two very different polymers in the exact same region. But wow, the story completely flips when we cross the Atlantic to Northwest Europe. PA6 DDP NWE prices didn't just hold stable. They absolutely plummeted by a massive 104 euros, dragging prices all the way down to 2,045 euros per metric ton. This crash, it was driven by a sudden flood of cheap import supply, hitting a literal wall of dull local demand. Meanwhile, European PA66 held stubbornly stable at 2,790 euros per metric ton. So here, we're seeing an intense tug-of-war. You've got rising foundational feedstock costs pushing prices up, while serious logistical constraints are successfully keeping a heavy lid on any further upward movement. All right, pivoting to section 3, Eastern markets, China and India, cautious sentiments. Over in China, it's basically universal paralysis across the board. For PA6, demand is just low. Buyers are firmly locked in a wait-and-watch holding pattern. And honestly, what's fascinating here is that this hesitation is happening despite rising feedstock costs. Normally, rising costs trigger a wave of panic buying, but not this time. And actually, that exact same caution applies to China's PA66 market too. Buyers are fully aware that production costs are going up, yet they remain extremely cautious, purchasing strictly on a need basis. Nobody, and I mean nobody, wants to hold excess inventory right now. Now, zooming in on India, we get this highly structured, localized snapshot. The spread between Mumbai and Delhi is incredibly tight. For nylon 6, we're looking at 217 to 219 rupees per kilogram in Mumbai, and that edges up just slightly to 221 to 223 in Delhi. That same tight premium applies to nylon 6.6, which is hovering in the 330s. This regional stability, which is calculated ex-GST, so before local goods and services taxes apply, is impressively persistent, even amidst all that crazy global volatility we've just been exploring. So, right, we've seen a ton of conflicting data so far. Tight U.S. supply pushing PA66 up, European PA6 prices crashing because of imports, and that deep Chinese hesitation despite rising costs. So, the most crucial question is, taking all this global intelligence into account, what should you actually be doing with your procurement budget this week?
Let's figure that out in Section 4, Market Pulse and Purchasing Strategy, the bottom line.
If I had to sum up the global pulse right now in just one word, it's caution. The nylon bazaar is, at best, moderately active, and trading interest is highly, highly selective. Even though we are seeing a slight bump, and I mean just a slight improvement in downstream demand, it is simply not enough to move the needle. Spot prices are effectively stuck in a very narrow range. Because the overriding sentiment is this cautious, major price movements just aren't expected in the near term. The entire market is essentially taking a collective breath.
Which leads us directly to the ultimate purchase opinion from Polymer Bazaar. Quote, as there was no spurt in demand, open bazaar prices are likely to remain uniform, so we suggest need-based buying. It is incredibly straightforward advice. Protect your margins, folks. Do not speculate on future price hikes right now. Stick strictly to need-based buying until a genuine, undeniable demand spurt actually materializes in the data.
Finally, Section 5, Instant Bazaar Access Tools. Stay ahead.
So how do you actually execute a need-based buying strategy? Well, Polymer Bazaar has made it ridiculously simple to bypass all the market noise. Literally just open WhatsApp, send the exact text PA6 to +91 93746 24365, and you receive instant market information directly in your chat. You can fetch this real-time intelligence in under 5 seconds. It's that easy. Having this chatbot in your pocket unlocks some serious advantages for your procurement team. You get real-time pricing and predictions, live notifications the literal second price revisions occur, and direct access to official company price lists right in your app. Best of all, it's 24/7. When you are operating strictly on a need basis, having reliable, instant updates ensures you never, ever make a blind purchasing decision again. You strike exactly when the time and, more importantly, the price is right.
Well, we've covered a ton of ground today, from Chinese feedstocks to the wildly shifting realities in the US and Europe. As global supply chains continue to tighten and fragment, I think it's safe to say the era of predictable pricing is over. So the question you really have to ask yourself isn't just what you're paying today, but is your procurement strategy agile enough to survive tomorrow's inevitable shock? Thanks for joining me for this explainer, and stay sharp out there.